Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 3rd, 2016. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, once again, guys, we have not broken through this Brexit range here. We can see the dollar index. Again, it continues to move sideways inside of this range after the Brexit vote. Now, once again, we can see our key VantagePoint level here is 95.47. We have closed slightly below this level at 95.38, but certainly nothing that would suggest a complete and utter trend reversal on the US dollar index. Now, our neural index is down. We can see that our predicted MACD is basically dead flat. Our predicted RSI 47.8. Slightly bearish, but it's not. There is no downward momentum in the dollar. Now, we do have the non-farm payroll this week. It is going to be a big week for the dollar here. We've got also have the ECB rate decision. So a lot going on, but again, in my respectful opinion, we are likely just to move sideways prior to the ECB and prior to, of course, the non-farm payroll. But we will get that first look at the payroll number via the ADP report on Wednesday morning. So for now, the dollar remains in a sideways pattern. Now, with the S&P 500, we're still seeing some buying here. We've got pretty much a top in place just under the 2200 mark. Now, what I want to point out here is what I've talked about for many months here is this what happened to the S&P 500 after the Brexit vote. We had a breakout play here above the high. We've come back down and we've tested this area multiple times. We're retracing back to the upside here, but again, you can see we are not making any new highs here, guys. And the only reason, in my respectful opinion, the equities got a little bit of a boost was because oil did from the OPEC nonsense. So, and again, that OPEC decision can only be called nonsense because in most cases they're not going to honor the supply cut anyway. So, you know, I'll talk about that more in a minute, but for now, the equities do still carry a bullish tone to them. Our predicted short, medium, and long-term differences are holding above the zero line, but our predicted MACD here is not broken above that all-important zero line. The predicted RSI is saying that we could have some upside momentum here, but in my respectful opinion, guys, only a sustained break of 2200 or the 2210 area will actually take the pressure off the downside. And the same would apply here to the DAX. We look at the DAX, it's struggling up in this top near this 10,800 mark. The Nikkei very clearly struggling just under that 17,000 mark. The key VantagePoint level 16,572. We're closing at 16,595. So it's moderately bullish here. But again, there's such a mixed bag here between the predicted MACD, the predicted RSI, the neural index, and the predicted differences. It still favors further downside on the global equity markets, being to some degree being led by the Nikkei. This would, of course, again tell me that oil is going to have a very limited rally. We can see that I've talked about this breakout point from the Brexit. We've had a retest rate here, another retest rate here, and each time we have had a failure. Now, this little zigzag pattern here has absolutely nothing to do with Elliott wave, Fibonacci, or any of this stuff. It's basically there's more sellers than there are buyers, and every time we rally higher to this level, right around between the $40 and $50 per share mark, right in this area here, oil has sold off every time. So only a sustained break of $51 a barrel will actually take pressure off further downside on the oil contracts. Now, when I look at gold for next week, gold could have a recovery next week. Our key VantagePoint level, 1325. I'll just bring this up so everybody can see it. Our 18-day predicted EMA comes in at 1325.44. We're closing well below that, guys, at 1313. So we'll have to see how the ADP report looks. But right now, once again, guys, if we go back and we weed out all this noise, and most of these economic announcements are nothing more than noise, guys. When we weed that noise out, that Brexit high point of 1365, we have had multiple retracements to this area. You can see right here, gold made the bulk of gains from gold came from the Brexit vote, which is of course the UK voting to leave the European Union. We've come lower, we've had a retracement back up, and then down we go again after yet another retracement. So your order flow, guys, they are selling into this 1365 area. Absolutely nothing has changed. We do have a triple EMA cross to the downside. So if gold goes lower here, guys, more than likely the euro's going lower, the Swiss franc is going lower, and possibly even the yen. So gold is a major player in our Forex trading and your commodity trading alike. So, and it's also having a very, it's having quite the effect on equities here also. Now, as we come into our major currency pairs, our first pair, of course, Euro US, that is probably the number one traded currency pair. 112.05. The euro's managed to fight its way at near the end of day back to the 112.33, but we had a pretty significant sell-off down to the 111.53 on the European data. I don't think it's going to get much better for the euro next week here, guys. We're still in this Brexit range, of course, right up to the 114.50. Shorts favored up into this area. Our predicted short, medium, and long-term difference, our strength indicator, and our predicted MACD, and even our predicted RSI is dead flat here, guys. This thing is just running sideways. I can draw a makeshift trend line down in here just under the 113 area. Very little has changed on this particular pair. This is trading in very tight ranges, and again, still with a downside biased here. So on a sustained break of 112.05, we are unlikely to see that until at least Wednesday of next week. But if the market anticipates a better non-farm payroll, then this one will sell off much quicker. Same as US Swiss franc, we can see a very mixed signal up here. You can see that I've come all the way out to the 6-month time frame on the VantagePoint software to make sure we can all see that Brexit range here. Now we've got a trend line intersecting with that Brexit high coming in around the 98 level. If we can take out the 98 level, this pair will go substantially higher. But right now the immediate resistance comes in at 97.29. We're closing at 97.12, very close to that VantagePoint 18-day predicted moving average, and a very mixed bag here. Our short-term indicators are suggesting US Swiss franc is going higher, and I would agree with that call from VantagePoint. I think buying on dips, that's what I'm doing with my own direct clients. We are basically long while above this range bottom down here at the Brexit bottom of 95.50. Only a sustained break of 95.50 will see a trend reversal to the downside on this particular pair. Now, same as Great Britain, US, we really are getting very, very sideways here on this pair. Just very few buyers. Not a bad long trade here on Trader Planet this week on this pair, but we're struggling here. We are not getting above this 130.65 area. We've come up and tested it this week, but we have failed yet again. Our neural index is turning back down, but our medium-term predicted difference crossing over our long-term predicted difference is telling me that we still potentially do have a long trade here. This is going to be determined by the price of light sweet crude oil. If crude oil sells off, guys, pound dollar goes lower, US CAD goes higher. That's how this one works. Okay, the very high intermarket correlation. So looking at our predicted RSI at 34.7, our predicted MACD crossing the trigger, it's probably a good time to stand aside on this one. But again, as long as this pair holds above the one, very critical what I'm going to say here, as long as the market holds above the 129 trend line area, then longs are still reasonable. But we want to keep our stops on any long trade down around the 129.10 area with stops around the 128.50. Now, as we come into the dollar-yen pair, this is an interesting setup also. I don't hear a lot of other analysts talking about this, actually, this Brexit high and Brexit low. You can see that the dollar-yen immediately sold off. Then we came right back up to the Brexit high. We sold off near the Brexit low, and then we saw buyers come back into here. Then we went down yet again, but each time we are not coming back up to retest that Brexit high. We are getting lower and lower. So what could save the dollar yen a potential long trade is if we can get above this 101.30 and hold above it. We've closed right on this level, the key VantagePoint 18-day predicted EMA at 101.31. So we've got to get a sustained break of this. What is it going to take for the dollar yen to move higher? It's going to take equities, the Nikkei to go higher, S&P 500 to go higher. That will push the dollar yen higher take money out of the yen or out of the Nikkei and put it back into the yen. We've got to just be very careful with this pair, because when you're trading dollar yen, guys, you are trading the global equity market. So if the global equity markets go up, dollar yen will go up. If the global equity markets go down, the dollar yen is going to go down. So right now it is pointing towards a potential corrective move. We can see this in the VantagePoint predicted differences, the long-term medium-term predicted difference crossing over that long-term predicted difference. So but we're not getting a lot of momentum in this particular trade to the upside. Any move to the upside is met with sellers. So to start the week, guys, the key levels that I would watch here, we've got yet another trend line forming on this thing, and that's going to come in right here. So where we want to watch this one is right around 102.90, or excuse me, 101.90. If we make a sustained break of 101.90, we could retarget a move back up to the 104 area. But if we can't break through this 102 area, guys, then dollar yen is absolutely going lower, which would indicate the global equity markets also could be moving lower. Now, as we come into our main commodity currencies here, you can see I've got quite a bit going on here for us to look at right around this area. Our Brexit high, US CAD has broke this area several times right here. We had a corrective move, but we got a much higher low. We came up, tested the Brexit high point again, sold off with yet another much higher low here, guys. You can see a clear trend forming here. Now we've moved up again, and this time yet again we've got a very, very strong trend line right around 130.80, 130.50. So keep an eye on this area very closely. The key vantage point level we want to watch this week, 131.13. We're closing above that area. It still carries a slight bullish tone, but trust me, guys, when I say this, oil prices will dictate the next move on US Canada, regardless of everything else. So if oil sells off, US CAD is going higher. If oil recovers up to $50 a barrel, then US CAD is probably going to come into the 129, 130 area. So watch oil very, very closely on Monday or Tuesday. That is what is going to give you your main signal. Right now, the VantagePoint indicators are very, very mixed here. When we look at it, they are predominantly mildly bearish is where I'll leave this at, but I think as long as this trend line area holds around 130.50, 130.80, longs carry a slight bias, because I do believe that oil will be very limited to the upside regardless of what OPEC says. Now, as we move into our final two commodity currency pairs, Aussie US and New Zealand US. Now, Aussie US, once again here, guys, here we are with this Brexit high. I've been talking about it for 4 months now, 5 months now. You know, we've sold off, we've come up, retested the exact area, sold off again, come up, retested it. That's a scratch, down it comes again. We come up yet again, hits it, down again. So here we are again, guys, right around this 76.50 area. So we've closed at 76.56. Our key vantage point 18-day predicted EMA coming in at 76.04. That's a big level to watch this week. If we lose 76.50 and we lose 76.04, look for a move back into the 73.74 area. But if this area holds and we keep pushing higher, then we're probably going to see a move back towards the 77.50, 77.80. But I'm not convinced that we're going to see any buyers up around this area. Now, our key vantage point level, again, 76.04. If you know your levels, guys, these are not that difficult to trade. So keep a very close eye. Two levels that you need to know going into next week, 76.50 and the 76.04 level. Can we hold above both of these numbers? If we can, then Aussie, this triple EMA cross from VantagePoint could produce a bigger long trade. But at this time, my optimism on that remains heavily guarded. And one of the reasons for that is, again, the medium-term predicted difference against the long-term predicted difference. This pink colored line crossing to the downside, telling me the medium-term trend to the upside is absolutely weakening. Indicators like this tell a lot, guys. They tell us a great deal. When everybody else is looking to buy, we should be looking at potentially cutting our longs and getting ready to go short. Now, that's not necessarily for sure what's going to happen, but there's a rationale as to, if when it does happen, there's a rationale as to why it happened. So right now, that medium-term trend is very much struggling here. So keep an eye on this. Longs still carry a slight edge while above 76.04 and while above 76.50. Now, New Zealand is a very unique one this week, guys. For the last couple of weeks, I've been talking about this area right in here. We have order flow guys that are buying New Zealand US off of this line that I've drawn in here. And then you have real money traders that are selling it up into here, into this key VantagePoint 18-day predicted EMA, or just above that. They're selling basically into the 73.50 area, and you've got your other guys buying at 72.20. We're looking for a break of this particular range. So if we can break through this area right here, then we should be able to retarget back around the 74, 75 area. But if we break this area right here, this line that I've drawn in, then that's going to open the door to a retest of the 70 level. Now, our indicators, again, from VantagePoint, the predicted MACD clearly losing momentum, telling us to be careful of long trades. Our predicted RSI, 48.4, but it's not breaking to the downside. So it's not too often that I see such an incredibly mixed bag here of, but overall, guys, we are still very much trapped in the Brexit range that I continue to talk about every week. You can see we've come up, tested it, and we failed. We've come back down to the downside, then we failed, buyers move back in. We come back up here again, fails again, but the dip is rather shallow here. Then we have a big, what looks to be a big breakout play. It's a bull trap. All the bulls, they get stopped out. Down we come again. So again, guys, 72.20 on the downside to watch, 73.50 on the upside to watch, a break on either side of that. We are likely to see a break on either side of this by Wednesday or Thursday of this coming week, definitely by Friday, once we've got our ADP report.